we're going to do now is we're going to have a panel discussion. So the members of our panel, again, Lisa James, who started us out, expert at Corcoran, is going to give us some perspective on on the process. This is going to be kind of a Q&A session. So we have some set panel questions, and there's also a lot of questions came in, and we're going to do our best to cover as many of them as possible. So I've already introduced Lisa earlier in the segment. The other two folks on the panel are two of our leaders. Tim Jeffrey is an AVP. He's a regional manager. He's been in the mortgage business for over 40 years. He lives in Virginia, and he's worked at UNFCU for just about 10 years now. He manages the Mid-Atlantic region as in charge of the Virginia mortgage branch. Our other panel member is Chip Allen. Chip has been with UNFCU for 25 years, I believe, right? Just about, Chip. And
Just
he
about.
also is an AVP, and he is a branch mortgage production manager who supervises our internal team of folks. So we got a really experienced group of panelists here that can help us, hit the Q&A piece as best as we can. Again, for the amount of people that are on the call. So I'm going to start with Lisa. Lisa, we've heard a lot, and one of the themes throughout this presentation has been the importance of pre-approvals and pre-qualifications and so forth. So from a realtor's perspective, why is a pre-approval even more important than a pre-qualification when you're taking somebody out house hunting or you're in the offer process, making offers on specific homes?
Sure. The pre-approval really gives you a competitive advantage. And I have a lot of customers who become clients who may come with a combination of, they'll have a pre-qualification letter issued by their bank, and they believe that they can very easily kind of move through the home buying process as easily as someone with the pre-approval. The way that I explain it to them is, when you are at home and you get a letter in the mail that says you are pre-qualified for a credit card versus actually getting the credit card, that is the difference in our world, at least, between a pre-qualification and a pre-approval. You can go house hunting or home shopping with the letter that says you may be approved, or you can go with the actual pre-approval. And in a market, in this particular market where there's low inventory and it feels like it may be a buyer's market, so there are more buyers out in the field looking for properties. When there's more competition, you have to figure out a way to differentiate yourself from other buyers. And one of the easiest ways you can do that is by getting a pre-approval first. If you're in a bidding war, the difference between one buyer that has a pre-qualification and a buyer that has a pre-approval will absolutely make all the difference. I think from the seller's perspective, it feels as if the buyer has done the work that is required to have them to kind of allow them to have a seat at the table and kind of like negotiate or move forward the process in good faith. Now, I will say that I have a lot of clients that also have pre-qualifications. One of the requirements that I make for them is that your lender has to be accessible on the weekends. And the reason being is that if I take you out to see a home with a pre-qualification and now you are interested in submitting an offer, we need to be able to turn around a pre-approval in order to get your offer in front of the seller and have the offer be taken seriously. So I know that a lot of buyers have concerns about when their credit, how many times their credit score is generated, the impact it may have on their score. But what I will have Chip and Tim speak to is when you're in that window of looking for a home, the impact on your credit score is different. So I would highly encourage buyers who are serious about looking to have that conversation with your lender and get pre-approved. It'll definitely be the difference between potentially winning a bid, losing a bid, or the length of time it may take you to find your home.
Thank you, Lisa. So, Tim, I'll piggyback off of what Lisa just mentioned. So, when you run a credit report, it generates an inquiry. Is the inquiry you get from a mortgage process the same as you would from a car shopping or a credit card shopping? Does it have the same impact on the borrower?
Well, they changed the rules years ago that if you are shopping, if you do a credit report for a mortgage, you're allowed to have other people pull the credit. It will not affect your credit score.
Okay.
So a lot of people were upset for years that if they applied to one place and others pulled their credit, all of a sudden their scores started going down. That is not the case anymore. So people are allowed to pull it. You can also go online to www.annualcreditreport.com. And once a year, you can pull credit, which will have the 3 credit scores on there to give you an idea where your credit is.
That's good to know because I think that is a common concern with folks. Um, Chip, one question that we have on the panel questions, but also came up in the chat is, if I'm a first-time home buyer, I'm saving for a down payment. Am I better off to save the 20% down, or should I take advantage of one of the low down payment programs like the 3% down or the 5% down? What are your thoughts on that?
Personally, I would say, if you are really serious about buying a home, and if the numbers work for you, so obviously this is going to require some conversations with both your loan officer and your real estate agent. I'm going to come back to that in just a second. Um, why not buy a home with 5% down payment? If you can qualify for the payments, then great. Bear in mind that 20% down payment is the sort of the magic threshold that everyone is always looking for a couple of different reasons. The primary one being that if a buyer or a borrower is making less than a 20% down payment, then an added type of insurance is required. It's called private mortgage insurance, or PMI, it's frequently referred to. Um, Nobody wants to pay added insurance. I mean, nobody wants to pay their car insurance or their health insurance either. But insurance has some real benefits. And the benefit of PMI is that it will allow you to buy a property with less than 20% down payment because, in today's world, an $800,000 home with 20% down payment is $160,000. That's a lot of money to save. And if you could potentially buy that home with $40,000 down payment, why not? A couple of caveats to that. Depending on where you're buying, this certainly is applicable for Lisa. If you're buying in New York City, there's no legal requirement that you make a 20% down payment, but it certainly is the standard or the anticipated down payment in this particular market, and it could be in other markets too. If you're buying a co-op apartment, wherever it is, typically there's a minimum down payment of 20%. But in much of the United States, buying a home with a very limited down payment, particularly as a first-time home buyer, is really common. And that's why we and most lenders have a lot of these programs available. PMI does go away ultimately. I think we're going to touch on some other ways that a buyer can bring in some extra cash from different resources that can play into this scenario. So, after a rather long answer, sorry about that.
No,
My
that's a great
suggestion
answer.
is, yeah, buy. I mean, if you're ready to buy and you can swing it and the numbers all work for you, buy it with 5% down.
So, Chip, thank you for that. I have two quick follow-ups. One is, if I was to choose to do that, put 3% or 5% down and take private mortgage insurance PMI to not have to put the 20%, do I need to factor in that PMI monthly payment into my qualification ratios like Jesse was talking about earlier?
Yes. So your PMI premium, that monthly premium cost, so because you'll pay it on a monthly basis,
Okay.
is factored into your qualifying debt ratio, your debt to income ratio. And PMI premiums vary depending on a couple of different factors. The loan amount, so the higher the loan amount, the higher your PMI premium, your credit score, So this is a place where there's a direct impact. The PMI companies, these are third party insurance companies, private vendors. They have very specific categories by which they, or credit score categories by which they price their premiums. So your FICO score, your credit score is going to have a big impact on it, as will your debt ratio. So, and the amount of your down payment. So whether you're making a 5% down, 3%, 5, 10, 15%, the larger the down payment, the lower your PMI premium.
And Chip, not to hit you with another question, but it's on the same topic and it came up in the Q&A. If I buy a house today with 3% or 5% down, and then, a couple of years from now, I want to refinance and the house has gone up in value, can I get rid of the PMI when I go to refinance? Like, how does that work?
Yes. So PMI can be removed in a couple of different ways. So lenders are required, let's say you do nothing. So you buy your home with 5% down payment. Your lender, in this case, us, the UNFCU, we're required by law to put a trigger within your loan that when you reach 78% of the original appraised value, the PMI is automatically going to go away. Now, if you are going to be more proactive and either make larger principal payments or perhaps refinance the property, and if your loan balance has gone down by way of you making your principal payments, plus the value of the property has increased or appreciated, and let's say now you've achieved that 20% equity in the property, when you refinance, there would no longer be a requirement for PMI. So people do frequently refinance for a variety of reasons, but one of them could be to get rid of their PMI premium.
And and presumably I'd also refinance if the interest rates were lower. So I get a double benefit of getting rid of the PMI premium and getting a lower interest rate if the rate was the beneficial. So really, and again, lots of pieces of information around this, but as a consumer, I think the takeaway for me would be PMI allows me to buy a home now rather than have to wait for the 20%. It calculated in to make sure it's still affordable, but it's not forever. It does go away through a number of different channels. So that's really good information to know. Lisa, I'm going to come back to you. So I'm gathering all this information as a prospective home buyer. I'm getting all the nuts and bolts about debt ratios and down payments and so forth. But the market has a flow, right? It improves. It's a strong market. It's a weak market. What do I really need to know about trends in the marketplace as I'm beginning this home buying process?
So there's a few things beyond the supply and demand of real estate inventory. One of the most important trends that buyers have to monitor is access to off-market and coming soon listings. So there are properties typically that you can find online, right? You can go on Zillow, StreetEasy, Realtor.com, whatever the platforms are, and see properties that are on the market. But there is an off-market network. There are properties that are coming soon. There are sellers that like to practice discretion and privacy and not necessarily publicly put their homes on the market. And this runs the gamut. It's not just luxury properties. It's just the idea that sellers don't want their properties publicly advertised. So one of the things that our team did, we developed a website. It's trademarked and proprietary, and we have off-market and coming soon listings on our site that buyers can register for and get access to, and be able to potentially see homes that they may be interested in before they come to the market. Yeah, before they come to the market. The second thing is the integration of technology. So obviously, technology is moving really quickly these past few years, but it's really picked up steam in the real estate industry. So I'm a member of homes.com. It is a third-party platform. Buyers have many of you have probably seen the commercials online. But one of the major trends is the ability to use AI to make your home buying process efficient. Now, one of the major conversations that pop up is, well, will we need real estate agents? One thing I have been talking about is for as long as I can remember, real estate agents have survived all of the changes in technology. And it's because it's a very human connection and a very human type relationship in terms of what people are being asked to do and kind of in order to like fulfill their hopes and their dreams. So homes.com has an interesting platform where you can, through voice generation, say, hey, I'm interested in a co-op that may have a down payment that is less than 20%, that is on the Upper East Side or is on the West Coast or in the South. And homes.com will automatically generate those properties. You can then ask the platform to only show you the kitchens in those photos or to assist in, you can say that you have a pre-approval and now you want to figure out what the monthly mortgage payment may be now that you know the taxes. So those are two things. I think that, like I said, it's really important for buyers to understand that in addition to properties that are on the market, there are properties that are off the market. And the people that have access to these off-market properties are the realtors. And the second, like I said, is the integration of AI in the market, especially for people who are looking across the United States and internationally. You don't physically have to be in the state that you are looking in to see some of these homes now. And it's really helpful considering just the cost of airfare, the cost of gas, the cost of moving around. I think the number of opportunities that we allow buyers to kind of find what they're looking for are the trends that are really picking up steam in today's market.
That's really good insight, Lisa. When I think about it, and tell me if I'm wrong, but I think a realtor brings three things to the table. The AI and the technology and the ability to have enhanced search capabilities, I think is great.
Mhm.
But I think realtors, again, through experience, you have a real knowledge of the local market, not I know myself like, oh, it looks great in the picture, but then when I get there, not so great sometimes, in the property, right? You help negotiate the transaction. And then also you help oversee the process, from start to finish, coordinating the inspections and the mortgage and all the various moving parts to this thing. So I think technology will enhance realtors' ability to do that because it's about a relationship, which, and I'll use this to segue over to Tim, like, I think for mortgage, it's similar, right? Like there's certainly enhanced technology. It's going faster and faster, but it is about the relationship. So Tim, if you could speak to like the relationship between the loan officer and the member and how that helps them achieve their goals of home ownership.
Well, one thing, as you mentioned, from when you introduced me, I've been in the business over 40 years now. And the one thing I find very valuable with UNFCU is it is not a one-time transaction. It is a relationship you're going to be with. And as Chip mentioned, when removing PMI, we have many members who take out a loan with us and 3, 4 years, 5 years later, will call us and say, can you guide me through this? Is it time for me to remove my PMI? So the really value that we give is it is a relationship. We don't want to do a one-time transaction. If you have any questions regarding anything with your mortgage, the phones are always open, and you don't see that at a lot of other places. It's a transaction, you just go on to the next loan. But here it's very valuable. And we have people who've dealt with the same clients for 10, 15, 20 years. And the best thing I see in our industry with when we work here is you start doing loans for their kids and for friends and so forth. So relationship is a key that we have here at UNFCU.
And I think that, one thing I see, and I'll, just my perspective on this, we have this concept internally about controlled growth. Like we're a large credit union, we have a lot of capabilities, but we're not trying to be this mega giant bank. You know, when you think of these super mega banks that are out there, you can think of the names. They have 70 million customers, 80 million customers. You know, you're going to serve 80 million customers with a website. You know, you're not going to serve, and digitally, you simply can't have enough humans on staff to service that scale. So here we keep it at a human scale, and I really day to day you see the benefit of that. And to your point, Tim, like the conversations, like sometimes as managers we're in conversations and a situation comes up and we have to make a decision about a transaction, what we're going to do, or we're going to do some credit or whatever. Um, every single time, without exception, and the senior manager talking, what's in the best interest of the member,
Mhm.
not what's in the best interest of our shareholders, because we don't have any shareholders. So it's really about, to Tim's point, that relationship we want to build. It's not about the one transaction. It's about the long-term relationship we want to have with everybody. So that's a really, really good call out. Chip, I have another kind of nuts and bolts question um, that I see in the Q&A. So folks know, and I think Jesse touched on this earlier, about, you know, preparing for the process and not moving money around or not making large deposits because that creates more paperwork. But somebody said, well, if I'm going to get money from my family, you know, my parents are going to help me out and they're going to give me money to help buy the house, and there's a deposit for that into my account. Is that an issue? So is that a problem, or is that something we're okay with?
Listen, getting a gift toward the purchase of your home is not a problem.
There you go. Okay.
In fact, lucky you, because you got a family member who is willing to, you know, help you out in this process. So yeah, gifts. Let's talk about gifts just in general. Gifts are certainly acceptable. Gifts need to be from a family member. Um, Now, we're not doing DNA testing on anyone, but we're going to take, um, well, let me say this. We are going to generate a gift letter. So the donor of the gift, let's say someone's parent, would be asked to complete this gift letter stating that I am giving my child uh, X amount of money and no repayment is expected. That's signed. We are there. There's a little bit of a paperwork requirement related to the gift in that we will want to see that the gift funds have come from the donor. So we'll need to see proof of that. And we'll need to see proof that the funds have been received by our member, the borrower. So gifts are certainly acceptable. The amount can be any amount. It could be a couple $1,000s. It could be a couple $100,000. We're happy to build in gifts. Do you want me to touch on a couple of other credit opportunities or that might be available for a borrower or a buyer?
Yes. Yeah. So I would like it, because it kind of ties into this thing about gifts. So what about, you know, obviously people can save for their down payment, but what about like grants and lender credits and different and seller credits for that matter? What sorts of things or resources are available to folks who are, you know, trying to come up with that down payment and closing cost number? Because that's obviously one of the big boxes for folks to check.
Sure. So let's touch on grants. Grants are funds that can be applied for and received by a buyer. There are a variety of different agencies, organizations, institutions that might provide gifts. UNFCU has some specific gift programs now available, which can allow up to $20,000 for an eligible borrower or member for those funds. That money can be used for down payment and closing fees, which is a nice aspect of a grant. There are other institutions also that provide grant funds. Religious organizations, community organizations. It Other than the grants that we offer specifically as a financial institution through the Federal Home Loan Bank of New York, typically it would be up to a borrower, a buyer, to research their own grant opportunities other than the ones that they might apply for through us. You're
So-
another reason to have a professional local real estate agent. Your real estate agent may know of some grants that are specifically available in the neighborhood, the area, the town where you're buying.
So in addition to independent research, good for things that we offer at UNFCU, because we do offer several different grants and programs, the loan officer would be a good place to start. And then for outside things,
Absolutely.
it would also be part of a good conversation with your realtor, right? Does
Yep.
that make sense?
Yep.
Tim, I'm going to come back to you. Again, nuts and bolts type question, but it seems to be, consistent. Jesse had mentioned earlier that 680 is our minimum credit score. We generally I think our median credit score is over 700, but we have somebody who's a member, they want to buy a home, they have the willing to do all the steps, but their credit score right now is 650. Like, what do we do for that person if their credit's not quite where it needs to be at this point, but they do desire to buy a home sometime in the future?
Well, one thing, as you know, we're told as loan officers you can't do any type of credit counseling, but you can help people with their credit. Tell people to review their credit. A lot of times, if you review the credit, people find out on their credit report maybe they have accounts that weren't theirs. Maybe they're co-signed and they're old, or they might have been their dad's, or so forth. So again, it's a good idea to review your credit. Look at your credit, what you could do on that. If you have lower credit, as you mentioned earlier, we talked about it. We're a portfolio lender. So if somebody has a lower credit score, we can do what we call compensating factors. If you hear that in the industry, compensating factors are my credit score is a little lower, but my debt to income, as Jesse mentioned, it might be low. My loan amount, I might be putting 20% down instead of 10%. So good idea if you have questions, if you have low credit scores, is talk to a loan officer. Have the loan officer see if there are ways that you will work with that credit score. And again, the beauty of UNFCU is the loan officer, if they have questions, they can go directly to an underwriter, and the underwriter can review them to them and give the member a better sense of they can move forward or not.
And Tim, just as a follow-up to that, let's say you have that person who today in the moment isn't quite ready. But can we informally provide them with a roadmap and say, hey, if you do a couple things, if you have, then, maybe 6 months or 12 months from now, you can get to your goal. It doesn't have to
We definitely can.
today. Yeah.
Yes, we definitely can. And we can also, the loan officer will check in, if you like, I could check in with you every 60 days, see how you're doing. And again, set up that relationship that I talked about earlier.
Right. And I think that's a huge takeaway. It's I think where we differentiate, and I think, and Lisa, I'll speak for you as well. I think where everybody on this panel right here, it's really about relationships, and I think now more than ever with the advent of technology and all the choices and all the options, having a relationship with a realtor, with a lender that you can really trust, has your best interest at heart, is probably the secret sauce, as they say. So I would say a couple other things. And I'm jumping back to the presentation and things that came up. So Sylvia talked about the products and the options and the programs, and she talked about closing costs, and that there was some costs were associated from the lender and some were third party, like title insurance and your attorney, and then there was the escrow account and so forth. So as a borrower, and Tim, I'm still asking you this question, as a borrower, how do I organize that? Do I get an estimate at the front end of the process when I apply that breaks that down for me? How do I kind of track what I should expect to pay? And then how do I confirm at the end of the process that everything was as expected, that I'm not showing up at the closing and the costs are way beyond what I was told initially?
Well, very good question. So when you do the application, you are going to get a form which is called the loan estimate. The loan estimate is going to give you an estimate of your closing costs, your payments, and so forth. When you go to closing, 3 days prior to closing, you're going to get what's called a closing disclosure. and that's going to be your final. It's the LE or is estimated, the closing disclosure is going to be the final numbers. And the forms look very similar. So you can compare, as you mentioned, Mike, you compare from the beginning. My numbers on the LE, how do they compare to the numbers on the CD? And so forth. So you can see if the numbers are within the same area that you started out with.
And I would think that would also be an opportunity for the loan officer to walk me through that if I did have questions, because if I'm not familiar, our team looks at those things multiple times a day, so we have the ability to really cut it to chase and get it down there. So I'm gonna, go back to Lisa. So Lisa, today, like if I wanted to start my house process today, I got off this call, I'm more motivated, I want to get going. What would be the things that you would suggest I do as a first step?
The first step is I usually schedule a 15 to 30-minute consultation with any buyer that's interested in purchasing.
Okay.
I think what's really crucial to understand is where do you want to live? What do you need in your area? And how flexible you may be with those requirements. I know that we were talking about making sure that you have, adequate money for a down payment, at least 20%. But what I am discovering in this market is that while there are buyers who want properties that may be turnkey or homes that are, available for immediate move-in, there is definitely a tendency now for buyers to be a little bit more open to work, a little bit more flexible in terms of doing some of the repairs themselves. And
Okay.
that's a pretty good enough reason to hold on to some cash when you're making your purchase. The other thing I will piggyback on what Tim was saying is that you have to build a team. And what I like about that is that the team is with the buyer client for life. The reality is that first impression is everything. So I've worked with a few, I think I've probably closed maybe about 6 homes with UNFCU members. And I probably have about 2 or 3 currently who are looking within the United States. And it's interesting because of inflation, construction cost, tariffs, people have shifted to being open to doing some of the work themselves, looking for homes that may be built from the ground up. So what you may have wanted a year ago or 2 years ago, all of a sudden it shifts. You realize that the, single unit or multi-unit townhouse may be a little bit outside of your reach. So all of a sudden condos are more favorable, because we're talking about shelter. I think that when people want to, reach the possibility of finding their first home, they tend to be a little bit flexible, but it's really crucial to identify the neighborhood, any future forecasting in terms of where you're working, whether you're looking for a new job, whether you're going to need to move within the next 3 to 5 years. Because there's been since pre and post COVID, there's been a lot of migration outside of New York to the South, to the West Coast. I've definitely had a fair share of clients from California move to New York. So when you sit with buyers today, I often discover that what they may have wanted 2 years ago is not what they want now. And it's a complete reassessment sometimes. And I'm always really flexible on whether I meet them first to then send them to the lender or whether the lender is meeting them first. But where I think there's really harmony is when the realtor and the lender and the attorney, when they truly function like a team. We all ultimately, we cannot get to the one person cannot get to the closing table without the other. And the reality is that once the closing has commenced, the buyer still has things to do and they're still going to have questions. So I am an open door. I typically work 7 days a week. And I've created a pretty efficient process for handling client inquiries. But I think your team is really, really important. Yeah.
Lisa, I think that's
Yeah.
terrific insight. And a couple of things we're going to wrap in a minute or two here, but these 2 hours went pretty quick. The you know couple takeaways is like know the area, know what fits for you, but also your first home isn't necessarily going to be your forever home,
Yep.
So
Yep.
it's important to, get in the game, because once you're in the game, whether it's a condo or whether it's a more modest home that needed a little work, or you get the benefit of it. Now the market's working for you, right? So if it's appreciating, it helps you there. You get some of the tax benefits. You get to pay down your mortgage. You're in the game. It makes the
Yeah.
second property easier, especially if you bought right with the guidance of a strong real estate partner and a strong loan partner.
Yeah.
So with that, if we could go to the next slide, guys, thank you. This was really great. I think we could do this for a lot longer, just to have this sort of experience and sort of brain trust available to everybody. I didn't get through half the questions. There's just not enough time, but thank you so much. So if we can take it to the next slide, please. Okay. So, folks, we covered a lot of ground. 2 hours went, I think, pretty quickly. We talked about the process and the timeline. We talked about products. We talked about qualifying. We had a pretty in-depth panel discussion with our leadership and with Lisa James about kind of the more, nuanced questions about the process. So what do we do now? What's our next step, and what are our resources? So if we could put up the next slide. Okay. As I just said a moment ago, my advice, and I'm doing this a long time, is, get in the game. You've got this information. Hopefully you took down some notes. You want to talk to your professional. So if you look in the chat, there should be some contact information for the people who are here on this call. Sylvia, Lisa, Jesse, Janet, and there they can help you if you want to follow up, because again, I couldn't get even through all the questions today. Okay. But you want to get an idea of what your payment might be. You want to utilize our tools and calculators. Our LOs can help you, guidance with that. So there's sort of three things to do here. You can do all of them, or you pick and choose. unfcu.org/mortgage calculator. Great tool to use. If 11 o'clock at night you want to figure out mortgage payments, go right there. The QR code will take you to our mortgage team website. You can get more resources there. This recording, this presentation will be on UNFCU's website. So if you want to revisit it or recommend it to anybody, and you have our experts from this call contact available. Okay. A couple of things we touched on it in the panel, but I wanted to think about some of this, what we offer at UNFCU. First-time homebuyers get a mortgage closing cost credit. For sustainable impact loans, which are loans that the property meets certain requirements around sustainability and how they were built, we also offer a closing cost credit, which can be layered. We have a program called a Homebuyer Dream Program, which offers different grants. Grant is money we give you to buy a house, and that there's qualifications on that beyond the normal mortgage qualifications. It's around you need enough income, but not too much, because it's geared to help folks who have lower income levels get into properties. So the grant program is available in the New York area, New Jersey, and tri-state. So I would look at that. But again, the call to action here is for you to do something, right? You took 2 hours to be on this call. Most of us are still on it, which is great. Take the next step. Speak with the realtor, speak with your loan officer, get all your ducks in a row. The house hunting process, at first it's exciting, and then it gets discouraging because everything you like seems too expensive. So use the professionals to help you get from point A to point B. But with that, we are just about at the top of the hour. I want to thank everybody. I want to wish you well with your time, with your search. And again, we hope to hear from you with questions beyond what we could cover on this call. Thanks very much and have a great day.